Good afternoon, everybody. Happy Father's Day to all those dads out there, because it's that big day. That day you get an extra pair of socks from your kids, or some other corny gift. I have a feeling that kids just don't know how to shop for dads. I could be wrong about this, but I know one time my stepdad at one point sat us all down and said, "Look, guys, I got more than enough socks to last me a lifetime. Please stop with the socks." So I don't know. I don't know. It might be a thing. But anyway, welcome to the show. It is so good to see you guys here on this wonderful Sunday afternoon. Guys, holy banana bread. We got ourselves a Black Swan event towards the end of the week. So we're definitely going to be talking about that. In fact, it's our number one story. Our number one story is all about that Black Swan. So what can I say? What can I say? A Black Swan event. And you guys know what we're talking about. We're talking about Israel. We're talking about Iran. We're talking about, we're talking about the Middle East. We kind of knew it was coming. If you guys remember, what was it? Maybe 4 weeks ago, I had a story on the weekend where I mentioned it was leaked that Israel was planning to strike Iran's nuclear facilities, and well, that came to light. So basically, Thursday night for us, it was technically Friday for Israel, but they launched a pretty darn big targeted military strike on a lot of the Iranian nuclear infrastructure on, I guess we'll call it Thursday, because it was Thursday here, so we're going to call it Thursday. But yeah, it was big. The strike reportedly hit some key enrichment sites, also some defense installations, interesting, and pretty much anything that was believed to be connected to Iran's nuclear weapons program. Iran, of course, immediately vowed that there would be retaliation, fearing, of course, causing a lot of fear. There's a lot of fear out there that we're going to see a broader regional escalation. And so far, that's kind of what we've seen. We have seen missiles coming back and forth. But guys, you guys could tune into any old news channel and they'll drill you with all of the stuff about, how many missiles are going here and how many missiles are going there. I'm more interested in what it's going to do to the markets. That's the aspect of this war that I am most interested in. So immediately, so Thursday night going into Friday, oil was the first to make a little bit of a move, and oil prices, they surged about 8% overnight. So for briefly, WTI, so the West Texas Intermediate, it got up to 75. It's retraced. I think right now, I looked at it a little bit earlier, it was around 71-ish. So that's pretty good. Gold is another one. So you might think we got a Black Swan event, we got all this uncertainty. Oil, of course, a lot of oil comes from the Middle East, so that's going to cause that oil spike. But guess what? Uncertainty causes gold to spike. So gold also spiked to a 3-month high, as some investors are looking for that safe haven. They're like, let's find a place that's a little bit more on the safe side. The overall markets.
Safe side chimney service.
Safe side chimney service is Alexa, stop. All right, that was actually kind of funny. She was telling me about safe side chimney services. A lot of the markets, though, Friday morning, of course, did open in the red. A lot of fear of a little bit of a regional instability. So it's going to be very, very interesting to see how this moves. Obviously, this tension, we're definitely looking at oil shock risk for sure. Overall, there's going to be a lot more volatility. I think we're going to see oil really, really moving. So that could be interesting. Now, keep in mind, depending on how things escalate, and I will tell you, I did hear reports today that there was at least one oil field in Iran that had some fire going on in there. So it could get bad. it could get bad. We're also talking about we could have some supply chain shocks if they're not able to move anything through the Strait of Hormuz, and that carries about 20%. So the Strait of Hormuz, 20% of the world's oil goes through that strait. So that could be at risk. So that could definitely cause some issues. Now, on our on our end, of course, some of our Canadian energy stocks, fantastic day on Friday. CNQ, Suncor, Synovus, just to name a few, had a good day. And they're likely to benefit, well, at least short term, from some of these higher crude prices. Now, we'll talk a little bit later, and I know you guys will ask questions about this. We're going to talk a little bit later about, is this something where we weigh, as soon as it looks like this crisis is averting, that we might want to sell out of some of those positions? That's a strategy. That's a strategy as well. So that certainly might come into play. Some of the U.S. shale producers also having a good day, as well as pipeline companies also enjoying. I hate to say enjoying, but enjoying a better day at least financially. Now, airlines, transportation, heavy manufacturing, there's certainly those things are also they're not having a good day because they could be facing higher prices. So if this pushes aviation fuel up, you're going to have some issues. And obviously any planes that have a destination in the Middle East, they might be rethinking things. So we got a few things going off all at once. Boy, when we have a black swan event, we have a black swan event. What can I say? So right now, what should we expect? That's kind of a big question. So I'm going to say right off the bat, expect higher demand for gold, cash. Some people will be moving into cash positions, U.S. treasuries, and some of those defensive sectors. So, utilities, consumer staples, I think those are going to be nice and safe. Emerging markets and tech stocks, those could be a little bit under pressure. So be a little careful with those. Keep in mind, there could be rate concerns and just the geopolitical uncertainty rate across the board. There could be a little bit of currency impact. So the US dollar and the Swiss franc are pretty much strengthening. They will strengthen in this crisis as safe haven currency. The Canadian dollar, we could actually see a surge as well because of some of the high Canadian oil prices. That could certainly help boost us a little bit. But if things progress for a long time, that could be a short-term thing. We could then see a little bit of that Canadian dollar strength start to sort of disappear if we get a bit more broader risk aversion going on. Now, we got a few things to watch. First of all, what's this full retaliation going to look like? There's a lot of talk out there, and on the internet, oh boy, you'll hear a lot of talk. Like you'll hear Iran's planning to attack foreign air bases, hitting U.S. bases. I wouldn't count on that right away. Right now, it's still contained, but there is that potential. The potential is there for it to turn into a wider conflict for sure. But for now, let's just not worry too much about that. We'll just sort of look at it as being Israel, Iran. Now, the U.S. is helping. They're helping defend Iran. Sorry, they're not defending Iran. Israel, the U.S. has been shooting down some of the missiles coming in. So we'll have to sort of see. Donald Trump did actually say in an interview, they asked him, is the U.S. getting involved? And he was like, well, maybe. It's like, oh boy, what a response. What a response, right? The other big question is, if the U.S. gets involved, is that going to drag NATO in as well? We'll have to see. Let's be on the positive side for now, I think. Will some of those oil producing countries that are not fighting, are they gonna maybe pump up their production? The rest of OPEC, for example, to try to stabilize the oil sector. So those are things to keep our eyes on. The other big thing is, Will this have an impact on inflation? That we'll have to see. That we'll definitely have to see. So here's my key takeaways from this. And then then I'm going to get to you guys. I'm going to get to you guys in the chat. Oh boy. So energy and defense stocks may perform well in the near term. Gold and other commodities could, of course, continue to rise. So, and you guys know I have been a huge advocate of at least one company that has been doing fantastic. Expect some increased volatility across global markets, especially in the Middle East, emerging markets, and any oil-exposed sector. So that could, of course, include Canada. Stay diversified. Consider adding exposure to some safe haven assets. Never hurts. Commodity-linked sectors if this conflict escalates. Now, mind you, there's a good chance that we may, have our main show and then maybe it'll back off, but it's hard to say. Israel has been incredibly aggressive on this, so we'll have to see where it ends up as we get through. All right, holy banana bread. Whew. Let's jump into the chat. Let's jump into the chat. We will start with Max R, wishing wishing all the dads a happy Father's Day and a happy Sunday for everybody else. Bismarcky saying, yeah, happy Sunday, fun day to all. And Bismarcky wants a 6-pack and a steak, but I'm not a father. All right, well, do you have a cat? That could count. If you got a cat, well, or a dog, that will count. Or maybe I don't know, a gecko in an aquarium. I mean, or a fish. You got a guppy. Any of those. We'll give you the dad status for that. King of Day says happy Sunday, everyone, and happy Father's Day to all of us in the house. There we go. Oh boy, Bismarcky. Oh yes. It's kind of interesting. This Black Swan event kind of took the focus. Took the focus off of Donald Trump and his military parade. So yes, Donald Trump had a military parade on Saturday. Oh boy. Now I love this. Bismarcky saying there are more people at Toronto's Santa Claus parade every year. Oh, for sure. That's classic. I mean, I used to watch the Toronto Santa Claus parade when I was a kid because I used to always have it on the CBC. But yeah. I bet it's more popular than Donald Trump and his military. I have not actually seen any footage from it. To be honest, I did not have a chance to look at that. So, oh boy, it's like, I mean, how many more steps until he officially becomes a dictator? I'm just curious to know. Mark says, happy Father's Day to all the dads, including me. There you go, Mark. Happy Father's Day to you as well. I love it. It's good that the dads have a day. It's good for you guys. It's good for you. I think the markets will be up and down this week. So yeah, volatility. I think there could be volatility for sure. Of course, we're going to have to see how things progress. Hopefully the worst is over, but no guarantee. No guarantee, guys. It's kind of that way that black swans happen. And that's kind of interesting. We all saw this coming. We talked about it. We talked about it here a couple weeks ago. It's here. It's here. We'll see how this is going to go. Now, if it does broaden, if the U.S. decides to get involved, to me, that would be the dangerous part. If the U.S., let's say, if whatever reason Donald Trump decides, yeah, we'll start bombing Iran too, well, then we got trouble. That would be trouble. But I think as long as, and I think it's, fine. The U.S. is shooting down some missiles coming in. Fine. Yeah, you can get that. That's fine. But I think if it goes any further than that, then we will certainly have a little bit of an issue here. All right. King of Day says, hate the fight, but love the deal. Got VFE and XEQT for less last Friday. So calling for a world peace. Yeah, for sure. That's the thing. We'll see what the markets do on Monday. I have a feeling there's still a good amount of fear out there right now. So I have a feeling we could have a red day. I have a feeling that we might see red day tomorrow. Monday. Yeah, tomorrow is Monday. There we go. I had to think for a second. Paul is in the house with a good afternoon. And oh boy, here comes the Bank of Larry, or the Empire of Larry, or Larry's Empire. Great week for my pockets. Iran is the size of Western Europe. They're coming with the boom. Yeah, this is the type of thing that you can make money playing. I don't normally recommend, if you're just a regular investor and you don't have a lot of a risk level, then, just sit back, dollar cost average into some of your stuff that goes down. You're going to be fine. But if you're on the more risky side and you like to play and you like to do a little swing trading, yeah, there's going to be some opportunities for sure. One of the things I was happy is I did buy most of my oil stuff before it happened for the month. So I'm like, all right, good stuff. Here's this thing. If we get a really big pump in oil, like if oil keeps going up and it goes up hot, there's going to be a point where if it gets high enough, I might sell out of all of my good stuff, all of my good energy stocks. I might sell it, sit down, and this is if it looks like, we're going to get a resolution. I might. I'm still kind of in the thinking about it mode. But it could be an interesting move. We'll see how it goes. I imagine the second we get an official peace treaty of some kind between Israel and Iran, that this guy here, Rory, will be jumping on some HOD. I have a feeling that's that inverse oil ETF, because when oil starts coming back down, the HOD is going to be going back up. So could be very interesting. So Rory says, by the way, hi, Rory. Hi, all. I think we should keep an eye out for Syria. Damascus is a hotbed as well. Yeah. And that's the thing. Right now, it's isolated between two countries. And I'm hoping, guys, that it does not escalate beyond the two. Let's just let them duke it out for now. Let's just let it go. I think it'll be fine if nobody else gets involved. But sometimes it's not so easy. All right, coffee time. All right. Larry says, was long oil then all in bear ETFs? Yeah. And that's the thing. Like I said, when it turns around and starts heading back down, oh boy, there's gonna be some really interesting opportunities. All right, Zyborg says, cheers from Toronto. Why, hello, Toronto. So gold and oil are peaking. Perfect time to buy and ride the descent. The good old descent. Yeah, we're in a situation like this. Is the thing. I look right now, like in the 0 to 100K challenge. My number one stock right now for returns is, it's London Gold. So London Gold is right now, they're way, way up. So I'm up about 70%, maybe 80%. I'll look. Let me take a quick gander here. I got to pull it up here. Challenge. Here we go. Let me see where London Gold is sitting at right now. 80. It's 80.70% up. That's fantastic. So yeah, it's difficult when you look at something like that. If you jump on it now, like I do think gold is going to continue to go up this year. Most analysts believe it's going to continue to go up but a big chunk of that growth has probably already happened for somebody like London Gold. It's hard to say how much more they're going to go. I mean, they're going to go up more. Yeah, for sure. But, if you're looking at it right now, like, where I'm up 80% right now, if you jumped in today, for you to get up 80%, it would be more difficult. Whereas if you had jumped into London Gold, let's say even a year ago, you'd be probably up over 200%. So just something to keep in mind. It does slow down, but it doesn't have to. And there can certainly be room for growth. And don't worry, you guys are going to see more London gold really, really, really soon. Let's see. Paul says the dads just want to do nothing. That's it. There we go. That should almost be a holiday. We'll have a nothing day where, the object is we just shut everything down and nobody does a thing for the day. I don't know. We kind of already got a few holidays that are like that anyway. A Victoria Day. Victoria Day is kind of like a do nothing day. Let's see. Redwater says big airlines have contracts for fuel. Yes, absolutely. That is a good point. There's definitely contracts out there, and sometimes you've got prices that are set. So that's not a bad thing. So, but we're still going to have to see. We'll have to sort of see how this is all going to roll out. All right. A says, let's see. There was mention of Iran looking at mediators in the news. Good. That's good. I like the fact that if Iran is looking for mediators, then Iran's looking for a way out. And that's good. That helps. That makes it easier. It's just a matter of getting Israel to calm down. Getting Israel to calm down and sort of step back. Say, look, you already damaged some of their nuclear stuff. Now, mind you, some of the nuclear sites they hit, a lot of their nuclear stuff is actually under those sites, underground in hardened bunkers. So it's not, they may not have done as much damage as they're hoping for, but we'll see. We'll see. Rory says, looking to capitalize on the volatility this week. I have one order ready to go. Worked on it this morning in my TD brokerage. Nice. And Larry says, I think Turkey will make a move if this lasts all week. Oh, gosh, I'm hoping not. Like I said, I'm really, really hoping to see that this just sort of calms itself down. I don't want to see anything escalating here, but the possibility is there. It is there for sure. Let's see. Paul says, worked 8 hours Saturday, 13,239 steps and 9.1 kilometers walked. And that was all just inside the Home Depot. That's crazy. That's a lot of work. Well, you know what? People who do retail, who work, whether it be at a Home Depot or a Staples or or even if you work at a Loblaws, you put in a lot of steps. Oh, yeah. Let's see. Red days mean more buying power. Yeah, absolutely. Larry says Turkey gets their gas from Iran and have a direct pipeline. Nice. 9 says I always buy gold. Awesome. That doesn't surprise me. 9 has a very defensive, a very good defensive core to their to their overall portfolio. So gold, U.S. Treasuries. There's a lot of good stuff in there. And we got Mary in the house with a happy Father's Day. And guys, Mary, of course, being the official captain of the like button, means hit the like button, guys. I'm going to have some coffee because you guys are going to be so busy. Oh, awesome. Awesome. All right. We got Thomas in the house. Where can I find more info on PHX? All right. Good old PHX. Well, actually, let's just jump over for a second here. Let's pull up PHX. And I'm going to show you where you can find lots of information on PHX. So we'll start. I'm going to start right over here. All right. So here we go. PHX Energy Service. So as you guys know, I do like this one. It's got a pretty good dividend here. Let me see here. Come on. All right, good. It loaded for me. Now look at this. That's pretty good. Pretty good. That's just a 5-day, but we're looking at a little bit of a recovery here for them. But here's the thing. We're looking at a high dividend. So 9.4%. Not too shabby. They are a quarterly dividend payer, 20 cents per share. All right, let's go into their back end. And in their back end, some of the things we can look at. This here, great. Debt to equity ratio, 26%, meaning they don't have a lot of debt. So that's good. But a lot of oil companies, when we had the boom over the last few years, well, before the last year, a lot of them did pay their debts down pretty good. Here's another one, return on equity. Love this, 21.31%. That's fantastic. Return on assets, 11.38. So great. We got some great stuff here right away. All right, let's take this to the next step. Let's go to, we're going to head over to Yahoo Finance. All right, here we go. Yahoo Finance right here. All right, PHX. All right, here we go. All right, so Yahoo Finance, another great site to come in and look at. So, you can get your basics in here, your everything from your PE. Look at this. Look at the PE ratio, 6.91. That may indicate that they're undervalued. That's, interesting. It's interesting. Something to keep in mind. Beta 1.67. So they're obviously a little bit more volatile than the market average. So the market average is 1.00. So this gives you a general idea. So they are more volatile. 1.23 earnings per share. That looks fantastic. All right, if you scroll a little bit further down, this is where you're going to get a lot of the stuff. So here's the return on equity again. Here's the profit margin, 8.34%. You get a few things over here, like PEG ratio we don't talk a lot about. Actually, they don't even have it for them. But you can get like the price to book ratio over here, 1.66. But right now, I'm going to go over to their statistics here, because what we're going to do is that dividend's pretty big. They got a pretty big dividend. So I'm curious to know about their payout ratio on that. So we're going to come down here and we're going to come over here to the payout ratio. Oh, look at this. I'm liking this, 65.04%. That's fantastic. So you got a high dividend. You have a dividend ratio that looks to be a lot more sustainable. All right. So we've dug a little deeper, Thomas. So where are some other places you can go? Well, actually, before we do that, let's just go one more place. I'm gonna pull this up here, and we're gonna go to. We're gonna head over to simplywall.st. All right. Yes. I know. I think this profile has already used the thing, but I'm just going to put in PHX here because what I want to see, I can see it in the free section of this. All right. PHX Energy right here. So here is a couple of neat things. So this is giving me a few things. One of the things I was curious to know is their earnings are forecast to grow. What is it? 14.11%. So we got that in here. We know that when we look at their fair value, that they're trading at about 64.8% below it. We kind of suspected that they were undervalued, and that's kind of confirming that. Analysts in good agreement that the stock So yeah, the analysts are expecting that stock price to won't let me go there. To rise. That's fantastic. That's fantastic. It's a bank month, so I've used all my free ones on this. At least on this one, I have to pull up another one. But yeah, normally in here you'll have a lot of data that you can pull out. So definitely go crazy. You get 5 free ones a month. If you have another email address, you can sign up with that and get another 5 free. So don't ever pay something like simplywall.st if you don't have to, unless you want to. I mean, if you really want to, go ahead. But you can usually get a bit more. Everybody usually has like a junk email address and a couple of others. So feel free to go that route. Now, last but not least, let's whoops. I'm going to go back into Google. All right, so PHX. I'm just going to type in energy. Well, so I'm not even typing. All right, PHX. I went all caps. All right, that's fine. That's fine. All right, now let's just see here. What we're looking for is we're actually going to look for their website. Let's see here, right here, over here. Here it is, PHX Tech, right here on the side. All right, so if you go to their website, they got a ton of stuff. You see up here at the top, it says investor. So you go to their investors and you can get copies of all of their financials. So you can get all of that raw data by going through here. So for example, here's their Q1 2025. And right in here, you got a lot of stuff. You got a lot of stuff. So you might be saying, oh boy, that's a lot to read. Well, you know what? Maybe not. Maybe not, because you can export this as a PDF. And then whatever AI you have, you could pull it up and have the AI read it and have it summarize it into a readable format for you. So it can summarize your key points, things like that, things that help sort of save you a lot of time. Now, the beautiful thing is when you use AI this way, it has all of the data. So it's not inventing data. It's just summarizing what's in there. So you don't have to worry about hallucinations or anything or AI making stuff up. This is one of those uses of AI that I absolutely love, because it gives you a chance to go in there. So there we go. So we went from the surface and we sort of dove deeper. And the beautiful thing is, with something like this report, and you can see right here, like here's a lot of data. Pretty much anything that you want, any statistic that you want to calculate, that if somebody didn't calculate it for you on Yahoo Finance or something, you've got all the raw data. You can do all of the calculations that you want. It's fantastic. It is fantastic. But with that all being said, Thomas, I don't know if it was you. I'm thinking it was you who asked me to do a deep dive on PHX. So PHX is on my short list. It is on my short list. I do want to deep dive them. I don't know if it'll be the next deep dive, but it's going to happen. It is going to happen because it is something that I do want to do. All right. Well, let's jump back to this side. Oh, that was a little bit of a tangent, but it was a good tangent. It was a good tangent. I like to show stuff. All right, Snowflake. So some of my oil stocks have been up 20 to 30% already. Continue to hold. There we go. Get Rich says, did I miss hit the button hype? Hit the like button hype. Yes, you did. But you know what, guys? If you haven't hit the like button yet, now's your time. See, look at this. Rory had missed, but Rory ran off and hit the like button. Awesome. All right. Paul says STRK and STRFX dividend date was June 13th, pay date June 30th. $2 per share STRK and $2.50 per share STRF for this quarter. Nice. Speaking of dividends, as you guys know, I've already talked about London Gold, and I'm gonna talk about them again in a video that actually Tuesday's video. London Gold might be in it. They have their dividend, like their dividend was just paid out. But guess what? It's a double dividend month because they got a special. They're doing so well, they're dropping a special dividend this month. So if you have London Gold, you're going to get some more dividends a little bit later in the month. I believe the 25th, so you'll probably see it on the 26th. So just more excitement. I love extra dividends. You can't go wrong. All right. What do you think about the impacts on tariffs on life? So this here is, of course, Labrador iron ore. So it's interesting. I mean, tariffs. Obviously, we got big tariffs right now on steel and aluminum. To make steel, guess what, guys? You need iron. Iron, that is part of it. So yeah, that can certainly have an impact on LIF. I think LIF though I think they'll be fine. They may, you may not see, you may see the dividend or dial back a little bit. And they may fall a little bit because of the tariffs. But and we're going to talk about this in a little bit here, if we do get some kind of a deal between Trump and Carney that sort of mitigates those tariffs, then then we'll be fine. Then everything will be back to normal. All right. Let's see. Thanks. Really helpful. Great. All right. Love it. Love it. All right. Paul says, I owned Costco during the last extra dividend. I know. You gotta love it. You got to love it when you've got when you got that extra dividend. It's just a great way to go. It's a great way to go for sure. All right. Oh boy. Well, the Canada Post, the potential postal strike. There's more news. Finally, we got some news. I complained last week that there hadn't been any news. Well, the government is ordering a direct vote on Canada Post's final offer. So this is kind of an unusual move to be made by the government, and needless to say, the union is not very happy about it. Basically, the union saying that it's a forced vote, which is in violation of their collective bargaining rights. And they're also accusing Canada Post of avoiding any kind of serious arbitration, because that's kind of where the union wants. It's like, let's get some arbitration in here. Needless to say, with this move the government's making, the union is asking its members to vote no on Canada Post's final offer. So what exactly is the final offer? So basically, Canada Post is suggesting that they will increase wages by 13% over 4 years. They also want weekend mail delivery, and they want a creation of a part-time postal worker corp, similar pay and benefits. So another little sort of a part-time core. Now, when I said weekend mail delivery, guys, we're talking parcels. That's going to be parcels. It's not going to be letters. They also want some structural changes that are aimed at improving their overall finances. Now, that's probably not a bad idea. When you think about it, Canada Post is they're not in a great place financially at all. In fact, according to the Industrial Inquiry Commission report, they're essentially bankrupt. And that's a report that basically said that, they're the ones that said that they need to stop delivering mail door to door. They need to concentrate on parcel delivery. There's a lot of structural changes that need to happen at Canada Post. So right now, it's going to be very, very interesting to see where this is all going. So with this vote looking like it's going to fail, the government, they've put themselves in that position because where they forced this vote, if this vote fails, and it looks like it will, the government's going to be forced into this mess. And boy, I can see another, are we going to get another kick the can down the road where they sort of say, okay, you guys have to deliver the mail for 6 months, and then we'll revisit this and say, is that what's going to happen again? I don't know. I honestly don't know what's going to happen, but oh boy, that could be something that we're coming into. It's going to be very, very interesting. None the least. We'll have to see. Let's see. Wake James says Canadian banks. Oh boy. Yeah. I mean, right now, and we actually just did, what was it, 2 weeks ago? We had our Canadian bank Q2 review video. So we covered all the banks in that. But overall, the banks right now, there's a lot of resilience in that sector. And I'm liking that resilience. I think they're going to be fine. They do have, of course, that double whammy coming at them. So there's two things at the banks. One is, of course, those mortgage renewals. So we are now in the heavier wave of mortgage renewals. So these are all the people back in the pandemic that got those those sub 3 and sub 2% mortgages. They're all coming up for renewal this year into next year. And those are people who are renewing at much higher rates. So as a result, There's a lot of those people who, if you look at the current stress tests for a mortgage today, a lot of those people would not pass them. And as a result, there's going to be a lot of issues that happen. Now, the banks are doing everything they can to try to prevent it, because obviously the banks don't want to be foreclosing on all of these people. So they're doing everything from they're looking at creative ways to stretch out amortization. They're looking at every way they can to prevent it coming down to foreclosure. But some people are just not going to be able to be helped. Some people are going to fail. There's no way around it. That's why there's a lot of loan loss provisions in there. Now, with the initial waves, the banks, they were prepared. They were better prepared. So most of them had put away more money than they needed. And so if that trend continues, that's going to be good. But keep in mind, we also have tariffs. Now, the tariffs, they're not a direct impact on the bank, but there's a lot of collateral damage that comes at the banks with those tariffs, because a lot of businesses that are crippled because of tariffs, well, if they've got loans with the banks, they may not be able to make those loans. So banks they've been adding more loan loss provisions because of the tariffs as well. So let's give you best case scenario. Let's give you worst case scenario. So best case scenario, the Bank of Canada comes in and lowers rates again in July. That would be good. It would help at least some people. And a deal is struck between Canada and the U.S., a trade deal. It may not be the best trade deal, but it's at least struck and brings a bit more stability to the whole tariff thing. That would be their best case scenario. Nothing you can do about the Bank of Canada will help with that wave. It's not going to help a lot, but it'll help a little bit. If the tariffs came to an end, that would at least really help with that collateral damage, but there's still going to be some, because some companies have taken quite a hit. And even if the tariffs stop, some of the damage has been done. So, there's still going to be some damage, but that would be best case scenario. I think the banks would have, 100% chance the banks will be absolutely fine and look pretty strong coming out of that. Now, worst case scenario, the mortgage renewal wave hits harder than they expected, and the tariffs continue, and we don't get that deal. In a case like that, yeah, the banks are going to be, they're going to still be fine, but, we could get to a situation where they go pretty flat for the next year. That would be worst case scenario. I don't see a situation where, you have to really be concerned. I mean, you can wait out whatever it comes at you, and with that worst case scenario, you could, especially if they go down a little bit, you would have some buying opportunities, ways to sort of stack your banks. Now, if you're using like a bank ETF, so something like, bank, that flat volatile time period could actually be pretty good for that ETF, at least when it comes to their covered calls. So, there's pluses and minuses to both, but I think the banks are going to be fine when all is said and done. All right. Larry says post need to increase prices. This is the problem with USA postal system. They're not allowed to raise prices. Yeah. Well, it's not just that. One of the big things in Canada is with the pandemic, the writing was on the wall that, regular mail delivery, pretty much dead. All of the money was going into parcel delivery. Canada Post had that opportunity. If they could have doubled down and if they could have expanded their parcel delivery services, they could have been in much better shape. Instead, a whole bunch of these little delivery companies got really big, all thanks to people ordering like crazy on Amazon during the pandemic. And now they've kind of got their foothold in there. And that's kind of the thing that Canada Post is looking at. Even if they increase their delivery presence, now they're in a situation where all of these little guys offer weekend delivery. So Canada Post will have to do it. And plus they're fighting against a lot of these people, and they could probably do it cheaper than what Canada Post could do it. But when you're looking at all of the overhead because of the union and everything else. So that's, raising stamps, not going to really help at this point because, honestly, nobody's sending mail anymore. Not really. Maybe I don't know, you might be that odd person who's like, "Oh yeah, let me send you a letter." But it doesn't happen as much anymore. Like normally, the only mail I receive is, maybe a jury summons, maybe the occasional thing from Elections Canada, or something from some organization asking for a donation. That's pretty much it. I think that's all the mail I received in the last year. It's not good. It's not good. That's why, for Canada Post, getting rid of the daily delivery. Yes, there are communities in the north that rely a lot more on Canada Post. It doesn't have to be an all or none situation, right? You could get rid of mail delivery in all of your big urban centers, and then maybe some of these places that do rely on Canada Post, like up in north, maybe up in Nunavut. Yeah, keep the daily delivery for places like that. It doesn't have to be an all or none. So yeah, if you got rid of it in all of the big urban centers, the savings alone from that, because that's going to be fantastic, because you're not losing your employees. Those employees who would have been delivering all of that, that daily mail, they can be out delivering parcels. There's still plenty of work there, especially if you expand more and more into the parcel delivery. So there is a way forward. But I think the union's going to fight it tooth and nail. It might even be a situation where we need Canada Post to just completely fail and then bring something new in. And then that something new, maybe it'll be Canadian Parcel instead of Canadian Post. I don't know. We'll have to see. We'll see where this is all going to go. For now, next step, union saying no. The union torpedoing what's up next. So, Paul says Strategy raised $979 million during the STRD IPO on June something. I don't know what date that is. With the settlement on June 10th. So, $1 billion Bitcoin buy might be announced Monday. It pays $10 a year, but not mandatory. That could be interesting. That could be really interesting. Oh boy. I guess I can't wait for Wednesday's stream to hear how this goes. Zyborg said, I thought suddenly issuing a lot of convertible bonds was a bad sign, often signaling weaknesses or even Enron-like scam, but MSTR and now GME doing it in the news. Am I reading that wrong? They're doing it in a strategy. Now, the beautiful thing is, I guess, with strategy is when they do these convertible bonds, they're using all of that money to sink it right into Bitcoin. So they're buying and gobbling up Bitcoin. And, they were doing it when Bitcoin was cheap too. So, it does pay off as Bitcoin keeps on getting more and more valuable. It's absolutely working. So even the amount that they end up having to pay out on these bonds, they've made usually that and much more from Bitcoin by the time they get there. So it's never been a big issue. But now, mind you, if we had a very long, prolonged Bitcoin let's just say crypto winter, it could put some pressure on them. But even then, you got to realize their adjusted cost base is really, really low. I don't know where it's at off the top of my head, but it would take quite a fall for them to actually get into a situation where that would cause any issues with them. All right. Let's see. Thoughts on ENCC now with the potential energy boom. All right. I do like ENCC. They are a covered call energy. Now, here's the thing, though. I will put this out there. If the conflict keeps getting bigger and oil starts going up fast, you are going to have a situation with ENCC that you're going to lose upside potential. So that's the one danger. Now, I think they'll be fine with their covered calls. They'll probably be writing longs and things like that. But I think they'll be fine. You'll still have your income coming in. But if you were to ride this wave up with a non-covered call, so let's say, for example, you were to ride it up with XEG, you're probably going to have a bigger total return on the other side. Now, mind you, it really depends on that speed, right? It's like if it moves up fast, that's when you start really missing that upside potential. And oh boy, it's time to head over here. It's time to head over here, and you guys know where I'm going, right? You guys know exactly where I'm going. I'm going to, and not to COVIDville. We're gonna come over here. The whiteboard. So the way something like ENCC, and we'll just put this in here. ENCC. There we go. So ENCC. We're just gonna use easy numbers to use, Arson. So let's say, for example, they were priced at $10 a share. We're just going to say that $10 a share. So that's fantastic. As oil goes up, you're going to get an increase in value. But when you look at what ENCC is holding, all right, so we're going to say, let's say, for example, they're holding, we'll just call it oil. We'll call it OS. So they have a random oil stock, and let's say that oil stock is, we'll say $5. So they're holding this oil stock worth $5. Well, they're writing options on all of the stuff in their portfolio. Not all of it, like usually it's about 33%. But if they're writing some options on this oil stock that's priced at $5, so it might be a situation where they're saying, all right, we think we'll say 1 month, we'll say it's a 1 month option, that this stock is going to be, it's probably not going to be worth more than $7. So let's just say they had this aggressive. And I'm using bigger numbers, Aaron, just to make it easier to show the math. So what they do is they say, okay, so after 1 month, this option that they sell will give you the right to buy. And usually it's a bundle, so it might be 1,000 of these, but you can buy it at $7 after 1 month. That's the contract. So 1 month from the buy date, you can buy, for $7 you can buy all of the shares, however many are specified in the agreement. Now you charge them a premium. We'll just call PR. Yeah, we'll do EM. So you charge them a premium. So let's just say, we're going to say that it's $1. We're just going to use, it could be higher, it could be lower, but let's just say it cost $1 for this. So this person is like, okay, so if they buy at, it's at $5. If they buy this contract, so let's say it was for 1,000. I'm going to put this down here, 1,000. All right, so it's 1,000 shares. They're buying this contract, so they're paying $1 a share. So basically, they paid $1,000 for this contract. So that $1,000, it's yours. It's yours. Doesn't matter what happens, you keep that $1,000. So that is yours. Now, if at the end of that month, let's say at the end of the month, it only went up to $6. Well, they have the right to buy it at $7. They're not going to take that. Why would they? They could if they wanted to, but they would have to pay you $7 for each share. So they're not going to take it. So in this case here, this contract goes null and void. It does not happen. And you're $1,000 richer. And all of your $5 shares are now worth $6. So you've got the growth as well. Fantastic. That's the best case scenario. But let's say it went up to $10 because of a black swan event. So for example, Israel launches a bunch of missiles into Iran. There we go. Well, at the end of that month, you've got 1,000 shares that are worth $10 each. Now they paid you the 1,000, so that's yours. You still get to keep it. But at the end of the month, all of these shares at $10, you have to sell them at $7 to the person who bought that contract. So you're basically at this point, you get your $7,000 because 1,000 times $7. So in total, you have $8,000. Here we go. One more zero. You have $8,000. Now, technically, the shares are worth $10,000. So you have lost, you've lost 2K of potential profit. Keep that in mind because, how much were they worth? 5. They were worth 5 when you made this deal. So they were worth 5,000. So you still technically made 3,000. So, that's 3,000 extra that's going to go into this ETF. But if you're only getting $3,000 in profit when you could have made, when you could have made more, when you could have made 5,000, that's that lost potential. That $2,000 that's lost, that's what we're talking about. So that's kind of where that happens. So as we have a strong market, whenever you're hitting these strike prices, the people doing the options, so even though you have, I'm just going to call it E for now, even though ENC is still going up, if you have something that's not a covered call, so something like XEG, it's not losing anything on the way up. So it's going to take all of that in stride and it will do better. It'll do better. Now that is in a strong bull situation, such as what's happening right now with oil. That's kind of where you're going to see that. Now, if we had a market, let's just put this aside. If we had a market that was kind of a really slow, we'll just put our x-axis here. If we have a really slow steep, it's not like a low slope, so gradual increase up. In that case, ENC will probably beat XEG. It'll be very, very close. Now, if you've got a sideways market, the award goes to ENCC. Or you got a downward market like this, what's like a slight, let's just say a not too steep, it'll go to ENCC once again. There we go. If you got a very, very steep, almost a fall type market, everyone's screwed. That's all I'm gonna say. Because if they're shorting it, they're gonna have the same idea. They're gonna have missed potential, and there's you end up missing a potential, and then you have to buy it back more expensive. It doesn't work that well. So basically, ENCC, if you've got if it's a weak bear market, a weak bull market, or a sideways market, perfect. It's just there's two strong ends where things get a little bit not so great. All right. Paul says a 2.05% mortgage with April 1st, 2026 renewal date. Renewals with the same bank do not require stress tests again, but any changes like adding HELOC and spouse to title and mortgage might need a stress test. Yeah, that's one of the dangers. Sometimes if you want to move from one bank to another, they may not take you if you can't pass the stress test. You may not be able to move. So just something to keep in mind. All right. All monthly bills try to get you to go paperless billing. Yeah, absolutely. I mean, why wouldn't you? Why do you want a physical bill anyway? I don't. It's kind of one of those things. It's funny, when I first started with National Bank, they automatically printed every trade I made and they sent it to me. I was just like, oh my God. And they charged me for all the paper. And I was just like, what? So I changed it very much to, don't do it because, not good. All right. Let's see here. What is a good mortgage rate now? A friend got 3.89 3-year fixed and 4.95 to 0.5 variable. 3.89 is not bad. That's not bad. I would consider that to be a pretty half decent considering where we're at. Now, there will be, We do know that more than likely we're going to see a couple more rate cuts right now. So, haven't, if you haven't done it, your mortgage yet, and it's later this year, you could be in luck. You might be able to get a little bit lower. We'll see where it does bottom out at, but 3.89 sounds pretty good. All right. Thank you. You spelled it out perfectly. Awesome. Awesome. Let's see. Butler Mortgage Guy said anything around 4% for 5 years is good. Yeah, I would say anything under, if you can get under 4, you're doing really, really well. Let's see. Strategy has not done an actual convertible bond since November 2024. Around there, Strategy seems to be doing more ATM, so at the money on the 3 preferred shares than actual Strategy. Okay. MicroStrategy Bitcoin average cost is it really that high, King a Day? Holy, well, I guess they've bought a lot now at higher prices now that it's up around 100,000, but oh boy, yeah, even though still 70,000, how often does Bitcoin go below 70,000 nowadays? What is it at right now? I just have to take a look and see. All right, right now it's down a little bit today. It's down at 104,000. All right. Let's see. XEQT to declare the dividend this week around Wednesday, perhaps. I would guess 0.20 this quarter. We'll see. All right. Did they have their low one last time, Rory? Because I know XEQT, it's like every second dividend is up in the 20 cents or more. And the odd one is like 9 cents in between that, if I remember correctly. Paul says, and if Bitcoin ends the second quarter not crashing down, Strategy will announce huge income with FASB rules. Interesting. Yeah, I still think Bitcoin has a bit more of a run to take. So I'm looking forward to seeing where things go. All right. Let's see. Amazing. Thanks for clarifying. No problem. You gave me that perfect opportunity to go on a tangent and use the whiteboard. As you guys know, I love using the whiteboard. Actually, it's funny. When I first became a trainer, I was a trainer before I moved into management at a group called it was a company called Uniserve, the internet provider on the West Coast. Well, they're national. They got stuff in Montreal as well. First thing I did when we got our new building is I was like, I want a giant whiteboard, because I wanted a whole wall that was pretty much whiteboard, and I got it. Absolutely. Of course, then I became the training manager, and at that point I was like, no, I don't get to train anymore. Initially, when I became the training manager, I still wanted to do 1 day with all of the new classes, but eventually I just didn't have the time for that either. But training was fun, and I loved the whiteboard. All right, Paul says, let's see, get all your debts paid off a few months before your mortgage renewal. Yeah, that doesn't hurt. Let's see, we most likely will not see 2% 5-year fixed rates again. If we do, there's some problems. Let's just say that there will be some serious problems if we have to push interest rates that low. Hopefully not. Now, let's see. As of March, it was 9 cents last quarter. Yeah, there we go. Exactly. All right. So we had another story that popped up this week that was pretty interesting, and it's all about defense spending. So Carney came out, and him and my MP, so my riding, David McGuinty, who is the defense minister, is my MP. Anyway, they announced a sweeping plan, a pretty big plan to rebuild, rearm, and reinvest in the Canadian Armed Forces. So this plan, it's going to include over $9 billion in new defense spending this fiscal year, which when you put it all together, you add up all the math, it gets us to that 2% of our GDP, which is basically the NATO target for now. Now, Trump has mentioned he would like to see that target moved up to 5%, but gosh, we'll be happy with 2%. If we can pull this off, it's going to be really, really, really cool. Now, some of the goals of this investment, we're looking to reinforce, basically our sovereignty in the Arctic more than any other place. Also improve some national security and cyber defense. Yeah, big time cyber defense, because that's kind of the new battleground in many, many ways. They also want to drive economic growth via some defense industry partnerships. So, and we're not just talking about with the United States. We're talking about diversifying our military defense pacts and relationships with the world, with a lot of other key allies, so that it's not so heavy on the U.S. Now, some of the financial breakdown. So personnel and recruitment, that's going to be the big one. So $2.6 billion is going to that. So if you know a young person looking for a job, guess what? The military is probably going to be hiring. So they're looking to actually expand the Canadian Air Force to about 71,500 members. And they want the reserves up to 30,000. So that's pretty cool. So they want to not just boost recruitment, but also retention across the military as well as the civilian defense teams. So that's pretty cool. They're looking at throwing about $844 million just to repair the infrastructure, military infrastructure we already have. Another $560 million going into cybersecurity. And then $1 billion. $1 billion going into emerging military capabilities. So a lot of that money is going to be earmarked for the Arctic defense. So Arctic defense going to get a lot of money up there. $2.1 billion for defense industry partnerships, and another $2 billion to help develop the broader global defense partnership. So yeah, that's a lot of money, but who cares how much they're spending? Well, we care, but I want to know about, what are the implications as an investor? How does that affect us? So one thing, Canadian defense and aerospace firms. So, there's a few of them like Magellan Aerospace, for example, or General Dynamics Canada or CAE. They could benefit from a lot of those procurement opportunities. So those are stocks to be looking at. Likely an increase in government contracts, so research and development and defense manufacturing activity. There could be a lot of long-term upside on these type of companies for these sectors related to cybersecurity, infrastructure, digital defense. Now, mind you, BlackBerry would fall into that cybersecurity area. So this could be good for BlackBerry. This could be good for BlackBerry for sure. But overall, these signals, overall, what they're doing, it's signaling a generational shift in our whole posture when it comes to defense. And there's a lot of big implications for domestic industry. So it could be good. And, we're going to have to start looking at a few more of these defense stocks just to see how this is all going to shake out as it happens. So what can I say? I'm liking it. I am liking it. Let's see here. Larry says 5% GDP seems irresponsible. I agree. I mean, look at the U.S. The U.S. has a lot of military right now, and they're I think they're 3.4% GDP. So, I think 2% is reasonable. I think it's reasonable. It's not like I don't think we need to gear up for a lot more than that. Hopefully not. Paul says, I sold the rest of my Solana last week for $12.99 a share to buy part of my STRD holdings, and sold some Tesla for $3.32 a share for remaining STRD shares. Got lucky. SOL.U closed Friday at 11:37. Oh, not bad. Yeah, you got out at a good time. Let's see. Rory is saying, Larry, our entire government in this country has been irresponsible for 10 years. Oh, boy. Jaws. Is it the 50th anniversary of Jaws? Oh, boy. The movie that made us afraid to go in the water. There we go. Yeah, Jaws. I mean, Jaws is one of those movies that it kind of still holds up today. Yeah, I mean, sure, you're looking at a bunch of people wearing 70s styles, but part of what made Jaws pretty good is, and you don't see this in movies today. You don't see this in movies today. Steven Spielberg, this is one of his first movies. One, most of it he actually filmed on the ocean. It wasn't in a soundstage. He actually filmed on the ocean. So that's one of the reasons a lot of their costs went over, because they had to wait for the right weather. Ironically, interesting, there's actually one scene in the movie when they're out on the ocean, and apparently, I've seen it, a ship or something goes through the sky, and people say it was a UFO. Who knows what it was, but it's just funny that it caught that. But yeah, one of the things I liked about Jaws is you didn't really have to show the shark a lot. You don't. Like today, we kind of expect that. Like, we want to see bigger, bolder. But back then, the whole mystery of the shark, a lot of times, it's just that, the camera moving through the water, the music, setting up the ambience. So that's pretty cool. Anyway, Jaws 50th anniversary. Love it. All right, Larry says, Rory, sadly, there's only a few actual good leaders. Oh boy. That's true enough. True enough. Let's see. We are getting old if we went to Star Wars in the theater in 1977. Yeah, 1977. So yeah, it's been a while. It's been a while. Curious to know how many of you actually did see the original opening of Star Wars in the movie theater in 1977. So, if you did, let me know in the comments. Kind of curious to know. Let's see. The liberal voters seem to not care about irresponsible government. Let's see. Jaws, Star Wars, Close Encounters of the Third Kind, all classic 70s. Yeah. I mean, yeah, a lot of the the whole birth of the mega summer movie pretty much came out of the 70s. Jaws and Star Wars was just absolutely out there. Close Encounters, scary for the time. All very classic. I would even throw in I think the original Superman as well. I would throw that in there too, because that's kind of used as a measuring stick against a lot of Superman or superhero type movies. Zyborg says, I remember when Star Wars came out, same era when I used my mail to mail my film in for processing and get the prints mailed back in 2 weeks. Oh my God. Yes, I remember the old days. Oh boy. Today, I don't know. I don't know if I could handle it today. It's like, take a picture and you find out if it sucks in 2 weeks. At least now you can take 5 or 6 pictures and one of them is probably going to be good. The Jaws theme, classic. Let's see. Larry was not there. Born in 1991. All right, fair enough. Paul says, I was 9 years old in the summer of 1977. Okay. So that puts you at 1968, I think. No. Yeah, 68, I think. Bill says, I seen Star Wars shortly after release in 77. Parents didn't think it was age appropriate, so they brought me some illustrated book instead. I hassled them until they eventually caved. Well, there's a thing. I mean, the original trilogy was designed for children. I mean, it really was. Although, ironically, and this is the funny thing, when they released the original Star Wars, they didn't have any of the merchandising done. They did not have any of the, the little action figures and stuff. In fact, in the winter, in the December, so in December of 1777, they had, I think it was Hasbro. They had what was known as the empty box campaign. So they still didn't have Star Wars figures, even though there was a huge demand for them. But you could buy an empty box that showed the Star Wars figures that the kid would get later. And yeah, I was just like, that's crazy. But apparently, yeah, that's what happened. All right. Rory says, I was 6 when I saw Star Wars in 77. I should have kept all my Star Wars toys from Kenner. Oh yeah, Kenner. There we go. It wasn't Hasbro. I think Hasbro eventually got them, but yeah, no, it was Kenner. Absolutely. Now that Rory mentions it, yeah, Kenner. All right, awesome. We do have a story. We do have a toy story, believe it or not. A little bit later in the news. All right, let's actually jump ahead here to the next story. Okay. We got our trade war front lines. There's not a lot in here. I just made this funny little picture because of all of the stuff going on in Los Angeles, and the National Guard, and then the Marines. Was it the Marines? Yeah, the Marines that got sent in. I thought it would be funny if Stormtrooper showed up too. So why not? So China. So yeah, the only real thing I want to talk about in our trade war front lines is that China and the U.S., they now have a new trade deal. So it does see China being tariffed 55% in total, which is down from the 145%. And the U.S. is going to get hit with a 10% tariff from China. This deal is also going to provide the U.S. with access to China's rare minerals and those magnets. And there's been a few tech companies complaining that they're running out of magnets. So China, in return, also gets access to the U.S. colleges, so their students can come over here and train. Now, that China tariff, that 55%, it actually does break down to there's a 10% base tariff that is on all countries. Then they got a 20% on top of that for the fentanyl, and then another 25% from way before on their Section 301 trade rules. So all of that together adds up to that big whopping 55%. What can I say? All right, let's just jump in. Let's jump into the next one. I'll have some coffee here. So we're going to talk about Wealthsimple. So Wealthsimple had some big announcements this week. So there's big changes coming to Wealthsimple as they are adding more features that, well, they're going to move them more towards doing whatever a bank can without actually being a bank. So first of all, they're looking at releasing their first credit card as well as a line of credit. Now, this first ever credit card is going to offer 2% cash back. And they're also, the line of credit's looking at, they're looking at rates around 4.45%. These are below prime. So that's big. That's huge. So this move, it's part of their ongoing effort to compete with, of course, you know who, the big six, of course, the big six, and taking things, offering services that go beyond just simple investing. Now, here's the neat thing too, is that they have a checking account, and it's now going to include mobile check deposits. So you can take a picture of your check, drop it into your Wealthsimple checking account, wire transfers, and this is really neat. Bank drafts with free shipping to recipients. So if you want to send somebody a bank draft, they'll deliver it to their door. That's pretty cool. Also, and this is huge, this is really big. You will be able to use your account balance as collateral for a line of credit. That's really big. It's one of these things that is kind of a bit of a game changer. You don't get that type of offer very often, let's just say. Now, Wealthsimple did want to emphasize that they are not a bank. And they don't plan to become a bank, even though my thumbnail says Wealthsimple Bank. Part of it is that if they don't become a bank, it leaves them with a lot of agility to innovate freely without the constraints of a banking license. There's a lot of regulations once you become labeled as a bank. And yeah, that would make it a lot harder for them to offer new stuff. Now, they did also want to emphasize that client deposits are still protected. They're basically, they have about 10 banks that they hold their money across, all of the investment and money that comes in through them. And that all has CDIC coverage up to $1 million. So You're in good shape. Now, overall, and this is kind of cool. 25% of Wealthsimple's users are already using some of their spending savings accounts. So they've had a good adoption so far. And that credit card that they're rolling out, that was their number one most requested feature. So it's interesting. They've actually been testing it in the background for about a year. So that's really, really, really cool. They've had every time they seem to roll some of these high interest accounts out, it usually brings in a lot of investors too. So definitely good for their bottom line. Now, it's really, really interesting. One of the challenges that they're going to face right now are, well, the big six, they've got a stranglehold on, on Canada's finance. So right now, the big six control about 90% of Canadian banking assets. And Canadians have historically been very reluctant to switch banks. So that's kind of one of their uphill battles. Now, there's a little bit of a hint of hope here because there was a recent Angus Reid poll survey, technically, and 25% of respondents are dissatisfied with their current banks. So maybe there's some chance here. In fact, 38% of those 25% said they're considering leaving their bank in the next year. So that could be where a lot of people start to flood into things like Wealthsimple. So that could be really, really, really interesting. So what makes this kind of an interesting play? Obviously, Wealthsimple, they kind of challenge the status quo when it comes to banks. They've been doing it ever since they came out with zero interest. And now, of course, we got National Bank. Now we got Questrade joining the fray. And the instant line of credit based on assets, that is actually really, really big. That's something you normally only see in private banking. So that's a feature I think is long overdue. And it's just, I'm excited. I'm kind of excited for a lot of what they're offering. I don't know about you guys, but right now they might be edging ahead of EQ Bank a tiny bit. So definitely excited. All right, back to the comments. A says, why would China agree to only keep 10% while US places 55%? Is there some hidden benefit for them? Well, keep in mind, they were already used to a lot of that tariff was already in place. So it's not like it's all new stuff. Pretty much the only stuff in there that's new is the fentanyl part and the 10% baseline. So, I think they're okay with it for whatever reason. So we'll leave it at that. Paul says, Wealthsimple has the same 8 p.m. ET Sunday to Friday, 8 p.m. ET 24-hour trading now, apparently. Nice. Okay, let's see. The same as Robinhood. Yeah, I mean, there's a lot of similarities for sure. All right, Bill says using your account balance as collateral is just another way of saying leverage or margin risky. I mean, it can be risky. It can be risky if you don't have the means to pay things back. Yeah, absolutely. Or if you're in a financial situation where everybody would say no to you and you're using this as your last resort, you're probably going to struggle with it. And, you don't want a situation, because here's the problem. If you got into a situation with something like this and you were struggling to pay it back or make your payments, read the fine print, because Wealthsimple might be able to just pull it out of an investment. And if it happens to be a red day, they might force a loss on you. So you want to be careful with that type of thing for sure. But if you can, if you're in a better financial situation and it's not an issue, then I think it's not a bad thing. But be careful. Always read the fine print. I've not seen the fine print on any of this yet, so we'll see. All right. Bill says, not just with paying back things. If your stocks drop suddenly, you aren't covering your collateral. They could liquidate you at a bad time. Oh, yeah. No, that is true. That is true. So, yeah, because, yeah, if, let's say, for example, you take out this loan based on your assets, and then we drop into a bear market. So, yeah, if you're going to do this, one, I'll tell you this right now. If you have $100,000 in assets, don't take out a $100,000 line of credit. I would say maximum 50,000, maximum. Lower the better. I would even say 25. I would even say 25, and then you're safe. So you want to be careful. And as I mentioned before, read the fine print. All right. Rory says, are we going to see WTI at $80 this week? It might get there. Depends on the war. I'm calling it a war already. It depends on this conflict. If this conflict continues to look like it's widening or looks like it's getting worse, then yeah, I think $80 is very reasonable. But if things start to back down, then no. Let's see. Ian just got here. Hi, everyone. What's happening with the markets? They're closed today. They're closed. I know. I'm just saying. Paul says, let's see, is that collateral on non-registered, not a TFSA or RRSP? That I don't know. I do not know that answer, Paul. And, to me, it would make sense that it would be non-registered, but it's hard to say. It's hard to say. Because, yeah, I wouldn't want to mess with your I wouldn't want to mess with your TFSA that way, or even your RRSP, because if you're using your RRSP as a collateral and they have to pull out of it, it's generating a taxable event. That would not be good. That would not be good at all. Oh boy. All right. We got a little bit of interesting TELUS news. So TELUS, they have proposed to buy back TELUS International. That's right. They want to buy TELUS International. So they've made a non-binding offer to reacquire full ownership of TELUS International. So the deal values the company at a roughly $940 million. They're offering, I believe it's $340 USD per share in cash, TELUS shares, or a combination. Now, of course, the offer only targets the shares that TELUS doesn't already own. Now, it's kind of interesting. First of all, let's talk about the market reaction. From this, TELUS International shares, they jumped in Canada. They jumped from $4.05 up to $5 on the TSX. So that's not bad, not bad. Now, here's the thing that's going to be interesting, guys. TELUS already owns 57.4% of TELUS International shares. So they already have the controlling interest. They have 92.5% of the voting shares and 6.1% of subordinate voting shares. But basically, they've already got control. So why do they want to buy it? Now, we're going to answer that in just a moment. So first of all, what exactly is TELUS International? So they're kind of a offshoot. Well, they spun out of TELUS. They provide IT and customer service solutions globally. They IPO'd back in 2021 at $25 per share. So they're priced right now very, very much discounted compared to where they were. But why? Why do they want to do this? That's the big question. One thought is that TELUS is looking to take it private, pull it off the market. If they did that, it would reduce public reporting requirements as well. It also would reduce the overall market volatility of those shares. It would make it a lot easier for them to streamline operations and as well as strategy across both businesses, both TELUS and TELUS International. But that looks to be what they're going to do. All right, let's get the last news story out of the way. Whoops, where am I at? Here we are. All right. Yes, we've got a red-eyed Barbie. This story, I thought, it kind of struck me as funny. But Mattel Mattel is teaming up with OpenAI to develop AI-enhanced toys and games. In fact, they're actually hoping to have their first product to launch this year. So the goal is to bring, well, age-appropriate AI experiences to children with a strong emphasis on safety and privacy. In addition to the toys, Mattel is adopting ChatGPT Enterprise, as well as other AI tools for their own employees. So they're doubling down on AI. They want it. Well, they're hoping that AI is going to help their employees enhance their overall creativity, product innovation, and efficiency. So why now? Pretty much in a nutshell, toy sales are under a lot of pressure. Consumer spending cutbacks, tariffs. It is, well, I mean, Donald Trump said you don't need 10 dolls, you just need a couple. So it's absolutely impacting things. Mattel, they've already accepted that they're going to need to raise prices in this current environment with the tariffs. So, Barbies are going up. Barbies are going up. They've also leaned heavy into TV, movies, and mobile games to help expand their reach and revenue. So that's all fine and dandy, but I'm a little concerned about an AI Barbie. I mean, your kid will be telling you, well, Barbie told me I could do it. It just seems to me like it's the beginning of a horror movie. The Barbies start to take over or something. But what can I say? What can I say? All right, coming up in this week, there's a little bit on Friday. Next Friday, we got PPI. So that is our producer price index. And we also got retail sales data dropping up here in Canada. In the United States, Tuesday, they've got their retail sales data dropping. Not a lot earnings-wise. Pretty much the only real significant company dropping their earnings on this week is Empire. So see how and they're probably done okay because consumer staples, they tend to do pretty well in this environment. And most of the food companies, they've been making a big profit. So it is looking good. Guys, that's the news. The news is done. I love it. All right. Let's zip on back. Now it's all you guys from this point forward. As the news is done. All right. I'm going to have some coffee here. All right. Ian says, my ENCL and WCP are up, was averaging down the last month or so. Still a few percent in the red, not counting dividends. Yeah, absolutely. And that's the thing. When we were talking earlier, and let me just sort of pull this over here. When we were talking earlier about this. This here is all of the the covered call stuff. So we were talking about ENCC. So ENCL, it is in the same boat, but they're using leverage. So I believe it's 25%. So one of the things with leverage is that when we do have, I'm not going to go full, but when we do have that strong bull market, I mentioned that XCG will tend to do better than, for example, ENCC. So ENCC might be down about here when it comes to the returns because of that loss potential. But when you have the ENCL, it'll knock that up a little bit because of the leverage. Because, you are gaining 25% more growth, and that does help offset a lot of that's lost. So are these even? If you reinvest those dividends, the ENCL during that bull market, you're very, very close. It's absolutely, I'm just putting lines here. It's absolutely within spitting distance, really, within spitting distance. So I'm loving it that way. So yeah, ENCL looks pretty good that way. But keep in mind, if it's going down, ENCL can lead the loss for sure. So just something to keep in mind. But yeah. All right. Let's zip on back. All right. Zyborg says U.S. needs cheap oil. Can they use strategic reserve to keep prices in the low ranges? The U.S. needs cheap oil, yes, but at the same time, oil right now is pretty cheap. And here's the reality. if the US were to drop that 10% energy tariff, they get a great deal on oil from Canada. So, they really can't argue. The way it works in Canada is, let's go back. Let's go back. All right, here we go. So over here in Canada, we have heavy crude. It comes out of the coming out of the oil stands. All right, and I'm going to put US down here, US, and then over here, Canada. All right, so Canada, we produce the heavy crude. Now, we don't really have very much capacity to process that heavy crude. So we sell it to the US at a discount. I'll just put in a D there. So discount. We sell it at a discount. They're getting a great deal. Now, the US, they do a lot of fracking, which is basically you drill down, you pump oil in between the shale and pumps out the water. So they end up getting a light crude. Now, what they do with that light crude is they sell it. They sell it on the world market for the most part. They use some of it, but they sell it on the world market. A lot of the refineries in the US is designed for heavy crude. So they're buying cheaper oil from us. The oil they're producing, they're selling it on the market for more. So if you look at it this way, for every barrel, so 1 barrel of this and 1 barrel of this, they're making money. They're making a profit. I don't know the exact dollar amount, guys, so I'm not going to guess, but they do make a profit because they sell this barrel for more than they buy this barrel from us. So the US has a really good deal. Now, one of the things they probably should have been doing is, before this event happened, they probably should have been adding to that strategic reserve. And maybe they have added some. I don't know. I haven't heard anything. But that's just kind of that interesting thing. So the US is in good shape. They've got lots of oil. They can buy as much as they want from Canada for now. And here's the funny thing, guys. Even with the 10% energy tariff, I'll tell you right now, they can still buy this paying 10% more, and they can still have a profit. Not as big of a profit when they're selling theirs when you look at it barrel wise, but they're still getting some profit. So that's one of the reasons that the United States went and gave that 10%, because it's like, yeah, we still want to make free money, and that's what they're doing. So, now if we have a deal set up, they'll probably, in that deal, that 10% will probably go away, and then they'll be back to making their profit, all of that fun stuff. All right. Jim is in the house. I made today, missed the last few due to work and going fly fishing. Oh, I have a fly fishing story. Believe it or not, I have a fly fishing story. My grandfather was an avid fly fisherman. So I asked him, how do you do it once? And so he took me out to the lake. And, we're doing the flippy flip thing, the flippy flip. I don't know if there's a name for it, but he showed me how to do it, and I'm doing it, and he's off behind me. And I do my flippy flip back, and I actually, scary. This is really scary, but I managed to hook his hat that was on his head. I'm very thankful that that's what I hooked, and I didn't hook his face or something. That was the end of it. After I did that, he was just like, maybe fly fishing's not your thing. I'm like, I don't think it is. But anyway, funny fly fishing. That's my entire career in fly fishing. One afternoon. All right, Paul says, wife and daughter got back from shopping for Father's Day dinner. They got me two giant things. Really? Twizzlers? Not too easy to eat. I tossed the Twizzlers to the side to avoid eating for now. Okay. All right. Hopefully that's not the dinner in total. Maybe you get a steak and then eat some Twizzlers on the side. Let's see. Zyborg said, wasn't it serial killer David Berkowitz who blamed his dog? My dog told me to do it. A couple of years, they'll be blaming the Barbies. I know. well, a couple of years, it'll be like the Barbie will run the house. You'll buy the Barbie, and the Barbie's like, if you don't do that, I'm going to tell the toaster to burn your toast. It could be bad, or it could be good. I don't know. Yesterday, haven't seen you in. I haven't seen you since a few yesterdays ago. Let's see. The news starts in 28 minutes when the commodity markets open. Gold and oil up big. Yep. Yeah, gold and oil, I think, are going to have a pretty good week. Pretty good week. Ian says, I'm not afraid of leverage. It's just like I have 25% more of the stock. More shares equal more gains and losses. Yeah, just as long as you can cover, as long as you don't if you don't leverage outside of your means when things go wrong, because you always have to look at it this way. When you approach anything, especially with leverage, you want to be prepared for the worst case. What if this absolutely fails? Can I afford it? If the answer is no, you shouldn't be using leverage. That's just the truth of it. King of Day. On personal finance, Rogers offered me a $70 internet. That's not bad. I called TELUS and got a matching deal, a $7 discount for a year. Not bad. On the phone for 49 minutes. Sometimes you have to. Guys, if you're paying a lot on your services, there's nothing wrong with checking what the competitors have, first of all. And, if, for example, Rogers is offering $70 and you're with TELUS, in this case, paying, $77, call them up. Call up the TELUS and say, look, Rogers is offering me $70. I don't want to leave you guys because I love you, but it's the money. I don't have a choice. I'm going to have to cancel. Don't be afraid to use the cancel word, because that will trigger things. Something called retention. You will get off to retention, and they've got the deals. Those are the guys that are like, oh, well, you know what? We can do that for a year. We can give you this. It's hard, but you're such a valued customer. We'll do it. And the odds are they probably could have went even deeper, but they're not. You've got to have the data to make them go deeper. It doesn't hurt to do it. I mean, if even King of Day spent 49 minutes on the phone. That's $7 a month. That's like that's a lot of money when you look at it for a year. That's like what, $84? $84. That's a share of London Gold. It adds up. All right. Paul says, pump oil to get water, mix up. Well, the funny thing with the water, right? And this is why it works. This is why fracking works. Water and oil, as you guys know, they're immiscible, meaning that they do not mix. So when you flood the water in, it pushes the oil out because the oil won't mix with the water. So it's that's why it works. No Twizzlers wasn't the dinner. Okay, good. I'm good to hear that. Ian says, thinking about jumping ship with Wealthsimple. I'm happy with them, but might get a bonus from the next brokerage. Well, it's funny. We're in that society now where the welcome bonuses are so good that it makes people want to start jumping around a little bit. The only thing is, and I always say this, when you get a good welcome bonus, be very aware, for one, how long does that bonus last? Like like with a bank, if a bank's offering you some extra interest, how long? When does it revert to your normal rate? What is that normal rate? Find out if there's any stipulations. If there's a stipulation that says, yeah, we'll give you this bonus rate for the first 3 months. But in the fine print, if it says that, but you have to stay with us for a year, well, that might kill the deal. So always be aware. I know people don't like reading the fine print. And you know what? You remember how I mentioned exporting something in a PDF and getting the chat GPT or your AI to read it? You can get your AI to read the fine print and say, okay, break down the fine print for me into point form, into easier to understand language. And then you'll actually catch some of the little stipulations that are in there, because the legal world likes to be sneaky. They like to put words in that most people, unless you've studied law, have no idea what they're saying. But they will, because it's legal, it'll hold up in court, of course. So always, read the fine print, or get ChatGPT to read your fine print. It really might save you somewheres down the line. All right, Get Rich says, I invest all of my HELOC and my LOC in index CC ETFs and HHIS and claim tax deductions on interest. I pay monthly interest from my paychecks. Yeah. I mean, if you have a situation where you can write off interest, there's nothing wrong with that. I always say, take advantage of everything you can get your hands on. Jay says, let's see, I pay $32 with tax unlimited 10 gig data, and with Rogers, I get 2% cash back. Not bad. Now, keep in mind, depending on where you live, if you live in Ontario, you're going to get milked pretty badly by the big three. But if you live in the prairies or Quebec, you can get much better deals. In fact, I used to know a guy who got himself, he lived in Ottawa, but he went and got himself an apartment in Quebec at the time it was Hull, now it's Gatineau, because he just to reduce the taxes, and he was able to get a better phone plan and all of this stuff. And I'm just like, oh gosh, that sounds like such a good idea. Ian says someone should read the terms and conditions with Apple and make a video explaining the weird personal privacy parts. Somebody in the tech field. I'm not going to do it. But I am curious. I'll check it out. Let's see. Oh yes, the good old legalize. Yes, absolutely. There is no welcome bonus at Questrade right now. Really? Oh well. I don't know. I guess Questrade is like saying, hey, we now have free zero commissions. That's your welcome bonus. I don't know. Rory says, so is AI going to be trained as lawyers now? Oh, I think AI, a few tests, they've had AI, and AI has passed the bar exam. So yeah, I mean, AI, here's a key though, guys. Anytime you want AI to do something for you. So for example, let's say you have a legal document, but you want it to translate it. Don't just say, hey, can you just translate this into English for me? If you want a really good result, what you want to say to the AI is, first of all, get them into a role-playing situation. So this is what I would do. I would say, all right, I would say, hello, today you are a legal expert, and you're very good at taking complex legal terms and making them understandable for people who don't have a background in law. So I will give it that. I will throw that at the beginning of my prompt. And then I will ask it to summarize this form. And you will be surprised how well it will do compared to if you just sort of throw it at it. So, set the context. Tell it what it is. For example, if you're asking for medical advice, tell it it's a doctor. Tell it what it is. So that way it's looking at it from that point of view, because you don't want it looking at medical literature from the point of view of I'm looking at everything. You want it to be very specialized in that task. So yeah, set up your prompts when you're using it. All right. Paul says the Questrade one from February is paid out over 24 months. Over 24 months. Oh my gosh. It's like 2 years to get your reward. You can use referrals like a YouTuber, and to get $50, you need to fund 250 or more within 60 days, I think. Yeah. I mean, the thing is, you have to, first of all, they have to approve you and get you all set up before you can do it. I've had trouble getting set up. I've tried a couple of times and it just does not work. They don't like me. And that's fine, because I kind of don't like them that much anymore, because I'm like, this is a pain. They're a pain in the butt. Yeah, good old Questrade. All right, guys, if you got your last minute questions, we're at about that time. We're about almost 2 hours. Get them in there. We'll get to them. I'm almost, oh my gosh, I'm almost out of coffee. So it's time, guys. It's time. So, this is your last call. This one actually is your last call. But, you ask the right question, you might be able to throw me off on a tangent and we'll go for a bit. Ooh, I'm loving it. So next video, Tuesday. Now, it's tomorrow if you're a channel member. Channel members do get to watch videos a day early. We're going to look at we're looking at the 5 big stocks of total return stocks of 2025 thus far. So we got some huge ones. Now, I will tell you, I did a little thing different because one sector in particular, and I won't mention it, you'll see it in the video. One sector did really, really well. So if I did the top 5, the straight up top 5, they'd all be from that sector. So I limited each sector to one company. So that way there we got 5 different sectors. So anyway, that's coming out on Tuesday. I am really excited for that one. There's a lot of great stocks, and we've seen some of them before. Obviously, I mean, they're the best of the best this year. So I can't wait. Get Rich says, thanks for all your live sessions. Very informative. Hey, that's what we're here for. I love this. So we will be back again, of course, on Wednesday for a market close. I do want to do a market open. Maybe this week. We'll see. We'll see if I can fit it in. Oh, I do want to point out as well, we did talk a tiny bit about the channel membership. There is a channel membership video coming out, channel membership live stream Thursday night. So I did post on the community tab for the channel members that let me know what you want to talk about. I know somebody replied and gave me video ideas. We're not going to do a video per se. It's going to be a live stream, but if you guys throw me a couple of topics, we throw up a vote if I get a few. I know last month nobody gave me anything, so I just came up with the topic. I came up with the topic on my own. It was good. It was actually turned out to be a really good stream. So yeah, we got that coming up on Thursday night. And as we get closer to the end of the month, the channel member, they get to choose the last video of the month, but you all get to narrow it down to 5 for them to choose from. So I will be dropping that. I'll probably drop that tomorrow or Tuesday. I'll put that in the community tab so that you guys can start coming up with what you'd like for that video to be. It can be a deep dive. It can be a list video. It can be I don't know, maybe you want me to explain something, whatever. You guys just get it in there. You guys have been doing really well. Like between you and the channel members, I think the last couple have been really good. So the pressure's on for you guys to come up with some awesome ones. Pressure is definitely on for sure. I can't wait. I always love to see what you guys come up with. And not ironically, some of the time, some of the ones that don't get voted, sometimes they still get done a little bit later. So, it's always good to get your ideas out there because I like to give you guys the content that you want. That's my goal. All right. Paul says Questrade 3% on first 10K and 1.5 on the remaining amount transfer is way higher than any Wealthsimple promos. Okay, fair enough. Terry says lovely program as always. Thank you, Terry. Thank you. You guys rock. You guys all rock. All right, guys. We will be back here once again. We'll be back on Wednesday. I can't wait. Until then, have a fantastic weekend. Happy Father's Day once again to the dads out there. And, maybe you'll have some buy the dip opportunities early this week. Let me know about them on Wednesday because I can't wait. Until next time, guys, enjoy the rest of your weekend. Bye-bye.